This is Real Tax, Real Insights, straight talk from the EY Center for Tax Policy in Washington, D.C., where we break down the tax policy developments that matter to your business. Today, we're taking a closer look at H.R. 1, the reconciliation bill that's now officially law. Did it land the way people wanted or expected? What is actually in the enacted legislation? And maybe more importantly, what are the next steps for U.S. businesses? Joining me today is Ryan Abraham. Ryan is a principal in our Washington Council Ernst Young practice. Ryan spent over 14 years on the staff of the Senate Finance Committee, working under former Chairman Max Baucus and current ranking member Ron Wyden. Today, Ryan spends most of his time working with U.S. businesses on legislative matters, including those related to implementing legislation once it's been enacted. Ryan, it's great to have you here. Let's get started. First question, what are your thoughts on the enacted legislation? Is it what you expected? Is it what our clients expected?
I think it's mostly what we expected. We knew this was going to be a bill primarily about making permanent the Tax Cuts and Jobs Act of 2017. A lot of those provisions were set to expire this year. This bill makes permanent almost all the individual tax changes, as well as some of these pre-cliff issues that are so important really for the manufacturing sector. I think it's a big win for business certainty, which is so important for companies trying to make investments and innovate in the U.S. Bonus depreciation, which is currently at 60%, goes back to 100%. That's permanent. Fixing the calculation in 163J for interest deductibility, really important for capital-intensive companies that are debt financing those projects. Plus, making 174 U.S. expensed, that's a big win for domestic research and development. It's not all perfect. Big hit for clean energy, who saw almost $500 billion of tax incentives going forward taken away. So that part of the manufacturing and energy sector, it's not all a win. But overall, this is a bill about innovating and investing in the U.S.
So Ryan, in many respects, enactment is just one first step in a longer process of implementing the legislation. So the focus now is on rulemaking. We're focused on the U.S. Treasury Department. Describe the process of rulemaking and what are the bigger items they need to address and how quickly must they do so?
Yeah, so we've moved on to the second stage of making laws, right? The Treasury Department is going to take this legislation, about 1,000 pages, and try to figure out, well, what are the major issues that we need to clarify, but this is this implementation stage. So we've already seen an executive order come out on the clean energy policies. These new rules that are applied across the code, they need to be clarified, and this Treasury Department wants to take another look at those. In other areas, we have new policies in international. We have some new concepts that the president really wanted, exempting certain types of income like tips, overtime, car loan interest. There's new special depreciation for production facilities. There's definitional issues around these things. But the Treasury Department can take any number of actions, right, to implement this. They can do sub-regulatory guidance in the form of notices, revenue procedures. They can do a more comprehensive, right, APA-approved notice of proposed rulemaking, and that's going to have a comment period and then final rules. This all takes time, and it really requires engagement for taxpayers and our clients.
So stakeholder engagement is a critical part of that process. It's contemplated. I think you would agree that we encourage everyone to participate early and often in helping craft that guidance.
Absolutely. Now is not the time to disengage.
So let's look ahead. All right. Unlikely that everything Congress, the White House, taxpayers wanted was included. So there's some things were left on the table. Do you think it's likely we may see another tax package? And what are those items that we should be on the lookout for?
Yeah, it's definitely a possibility, right? A lot was done in this bill, including things like addressing the debt limit. But, that's the thing about tax policy, right? Like, we're never done. There's always legislation that members have introduced that was not included in this bill. So these member items will be front and center. And with a big bill like this, there's technical corrections and also policy adjustments that will be needed. So we're not completely probably done with this bill as well. So there's already been talk about a potential second reconciliation bill this Congress. There's also a possibility for bipartisanship. There are tax extenders that haven't gotten done that could be up at the end of this year. So I think we'll even be busy back on the congressional side as we also look to implement it at Treasury and the IRS.
So more to come in this space. Ryan, thank you for your insights. And thank you all for watching this episode of Real Tax, Real Insights. In the coming months, we'll be releasing more episodes featuring other EY tax leaders from the Center for Tax Policy, breaking down the most top-of-mind topics in tax.